Hey everybody, welcome to your weekend review for the week of Monday, August 22nd, 2022. And oh, what a week it was. Monday was a rough day. MBS started out down 22 basis points on the day before ending down 36 basis points. Really rough day for the S&P 500, being down 90 points on the day. Hedge fund managers are unleashing some record bets that the Federal Reserve will stick with its hawkish script. So basically, a lot of hedge fund managers are making big futures bets that the Federal Open Market Committee is going to keep increasing interest rates at a high pace. This net short position hit an unprecedented 695,000 contracts. This is equivalent to $17 million worth of cash risk per basis point of the move. So what does that work out to? About $85 million on a half-point raise by the Fed. Investors are also waking up to the looming acceleration of the Fed balance sheet reduction. So-called quantitative tightening kicks into top gear next month, so there'll be more and more bonds on the market for sale. The upcoming week, we will get a bunch of important economic data, including the second revision to the second quarter GDP on Thursday. Personal income and spending on Friday, and personal income and spending indices will contain the PCE number, which is the all-important Fed number. MBS are exploring the new range. The dual ceiling is around 100.5 with the floor all the way down at 99.281. It's going to be a very interesting week as we explore this range. From our sponsor at www.WellThatMakesSense.com is the thought of the day, which is, if being hard on yourself worked, it would have worked by now. So take it easy on yourself a little bit out there. Tuesday opened up good for stocks and bonds. MBS were up 20 basis points early and the S&P was up a couple of points. Futures on the S&P 500 index and the NASDAQ fluctuated after U.S. stocks plunged most in 2 days on Monday, which was a rough day. New home sales came in at 511,000 in July, which was weaker than expected. This is down 13% month over month and 30% year over year. Yeah, they're down because there aren't any. In fact, 24% of the homes that have been sold haven't even been started yet. Only 10% of homes being sold have actually been completed. Like you said, 24% of new home sales haven't even been started yet. The median home price rose 5.9% to $439,400, which is up 8%. As the day went on, we got more and more data, and the MBS ended up down 3 basis points on the day. So we had a midday turn. Rising rates are beginning to be felt in the economy, at least according to the S&P 500 Composite Flash PMI. So we got some more PMI data, which lends itself directly to inflation, which, I don't know if you've heard this lately, but it's a big deal. Market services PMI came in at 44.1 versus 49.2 forecast. It was 47.3 previously. Manufacturing PMI came in at 51.3 on a forecast of 52. Composite PMI came in at 45 versus 47 previously. New home sales, like we said, came in at 511 versus a 575 forecast. Interestingly, the Atlanta Fed GDP Now Index shows a rebound, which is anticipating positive growth in Q3. I don't know what they're seeing that I'm not. I don't see it happening. Bonds have shown plenty of willingness to react to PMI data over the last 2 months. S&P Global Market version, which we got today, isn't as tradable as the ISM, but it's definitely moving the needle this morning. MBS, like I said, ended up the day, we're down in this range, so we still have that ceiling around 100.5 with a floor of 99.281. Bloomberg reports that U.S. gasoline prices have fallen the past 70 days, the longest streak since 2015. The national average price is $3.89 per gallon, according to AAA, down $1.12 from the record high of 5.016 in June 14th. That's a 22% drop, so that's good. On Wednesday, bonds had a relatively flat overnight session, only to go on a selling spree as soon as the domestic session opened up. MBS were down 22 basis points early and pretty much stayed right in that range all day. Today's version was a bit counterintuitive, considering that durable goods headline was quite a bit lower than expected, but that was somewhat offset by the fact that the core durable goods came in just a bit higher than expected. Durable goods came in flat versus a 0.6 estimate, was up 2.2% last time. Non-defense, excluding aircraft, was up 0.4 versus a 0.3 forecast. Since August 1st, the probability of the Feds raising the Fed funds rate by 0.75 of a point has moved from a low of 20% on August 2nd to a high of 80% on the 5th after the release of the hot July employment report. There it remained until 8:10 when, following the CPI report, it fell to 40%. Whereas remained through 8:18. Since then, it's risen, closing the week at about 70% chance of 0.75 of a point increase. Pending home sales fell 8.6% in July to an index of 91, where 100 is basically the 2001 market. At 99.7, we're right in the middle of that new range that we're exploring, where we have a ceiling at basically 100.4 and then a floor at 99.281. Mortgage applications actually hit a 22-year low last week as purchases declined 1% and refis fell 3%. We also got the first post in a series from our sponsor at www.WellThatMakesSense.com. This one is on the book, How to Win Friends and Influence People. Excellent book, awesome book. If you've never read it, subscribe now so that you can see the notes from it, because if you haven't read it by now, probably not gonna. Great book, so check it out. On Thursday, MBS were up 5 basis points early on better than expected GDP numbers. The second estimate of Q2 GDP came in at negative 0.6% versus negative 0.9 from the first reading. Was 1.6 negative in the previous quarter. The price index rose 8.9% in Q2, which was 8.2 in the previous quarter. Core PCE rose 4.4% in quarter 2 after 5.2 the previous quarter. Remember, PCE is supposed to be around 2% per year. Initial jobless claims came in below the estimate at 243,000 versus 255 expected, and the prior print of 245,000. Continuing claims were 1.4 million, down slightly from the last reading at 1.43. As the day went on, we got a really good bond auction, and then a lot of sentiment is pointing towards good comments on Friday out of Fed Chair Powell at Jackson Hole. At the end of the day, we ended up being up 47 basis points on the MBS 4.5. Treasury, the 10-year Treasury came down 7 basis points, and we're at least heading back towards those ceilings at 100.4 and 100.603. So hopefully we can keep momentum going on Friday. We also got another post from our sponsor, WellThatMakesSense.com. It's another one from How to Win Friends and Influence People. This is educating you that people like to feel like they're buying, not like being sold. So read our post and find out how. And I don't know whose idea it was to schedule so many important things on a Friday. Very irresponsible. MBS opened up on the right side of flat, being up 5 basis points. Stocks were down 25-ish. Personal consumption expenditures rose by 0.2% month over month in July, which was down dramatically from 0.7 recorded in June. Personal consumption expenditures fell from 1% to 0.1%. Then finally, the big one came in. Pce Price Index, which is the Fed's preferred measure of inflation, fell 0.1% on a month over month basis. Excluding food and energy, it was up 0.1. This suggests that we have turned the corner on inflation. However, the Fed will need to see a string of these before it takes the foot off of the brakes. On a year-over-year basis, the Pce Price Index rose by 6.3% on the headline number and up 4.6% excluding food and energy. Reminder, that's supposed to be around 2%. And then Fed Powell spoke. Bonds tanked. Bullet points from the Powell speech up at Jackson Hole was, there's going to be some economic pain in order to fight inflation. So get ready. You're going to feel the pain. Rates have to stay high for a while before they take the foot off of the gas. Brakes, depending on how you look at it. Gas on increasing the rates, brakes on slowing down the economy. 1 month of inflation improving isn't enough to declare victory. Upcoming path depends on data. The first reaction in the market was bad. Bonds tanked, ended up being down 22 basis points on the day for the MBS. Stocks took it even harder. S&P down 141 points on the day. So we're down here firmly in the lower part of this range. Like we said, we had a floor of 99.281, a ceiling around 100.5, and we're getting closer to that floor, which is not good because the next floor after that is quite a ways down. So hopefully we don't make a run at that next week, although it is jobs week. So keep your cortisol high, folks, because it's going to stay there. We also learned that the Freddie Mac U.S. mortgage index soared to 5.5%. The average rate was 5.5% last week. Blackstone-backed Home Partners of America is stopping purchases of homes in 38 cities and will add more in October. So they are severely scaling back on buying every house they can keep their hands on. Real estate startup Really has joined the list of companies shutting down for various reasons. Based in San Francisco, the fintech company said they will cease operations and start laying off most people September 9th. Guess $100 million doesn't go as far as it once did, especially if you're trying to do a startup in San Francisco. Seems questionable to me. Go someplace cheaper. Anyway, next week's a big week. We got a bunch of data. So we get Case-Shiller Home Price Index on Monday and the FHFA Home Price Index on Monday as well. That's important stuff, though not huge market movers, but we work in mortgages and real estate, so that is important. MBA Price Index on Wednesday. Thursday is where things get real interesting. We get the ADP national employment number as well as jobless claims like usual. But we're also going to get labor costs and productivity, which go directly into inflation, which is a big issue, as well as the ISM PMI. We love initials data. So that's another inflation read. And then on Friday, we get non-farm payrolls as well as unemployment rate and factory orders. So lots of data coming, particularly late in the week. So it should be a wild one. So rest up and learn some new things over the weekend. Check out our sponsors at WellThatMakesSense.com. Like I said, have some great posts going on over there about how to win friends and influence people. If you've never read the book, check out the posts, learn some good stuff, and our other sources. Have a great weekend.